this is Brian Resney, president of Resney Wealth Management, bringing you an important update about the economy and the investment markets right here in sunny Bora Bora. I'm at the Four Seasons. I'm off remote location doing a lot of investment research. And actually, I am doing a lot of investment research, but I'm on vacation for the next couple weeks. But of course, my job never stops. I'm on constant calls with the staff and so on, but I do get a lot of downtime. But I thought I would do an update since we have a new president this week. A lot has gone on. I want to just give you some general updates. Markets essentially hit a record high. We have positioned our client portfolios for a growth economy under a new Trump administration well before our current president was officially elected in November. So we're seeing record highs in the U.S. equity markets. We continue to be centric in growth areas of the U.S. economy. Within the U.S., we are not investing at all internationally, and we've made a few adjustments to our bond exposure, generally speaking, but not a lot. We see interest rates basically being fairly stable this year with a few more interest rate cuts by the Fed. I see a 2 to 2.5% GDP growth in the U.S. marketplace this year, but I'm really looking at the next 4 years, folks. So a couple things. Number one, we're seeing a decent GDP growth opportunity for 2025. But the next overall 4 years, I see GDP hopefully pushing well into the 3% range starting in 26. This will be very dynamic for the U.S. economy on growth and earnings, and I firmly feel the best place to be invested the next 4 years and potentially longer is going to be the U.S. marketplace. There was some major announcements in the last couple days by our current President Trump about AI and expansion into this overall technology field. Major areas that we're invested in right now obviously are in AI infrastructure, semiconductors, and financials are our highest overall weightings. We firmly believe that if you have deregulation, lower taxes, all the positive things, common sense, I'll use that word and I'll use the president's word, common sense. If you have a common sense agenda, that could really help the U.S. population thrive and our economy thrive. We are headed in that path. So as always, expect volatility this year. This, again, I'm going to go back, will be a transition year. We're going to have some ups and downs. I would not rule out a 10 to 12% pullback in the equity markets and even potentially the bond market in 2025. But that doesn't mean we're going to be down for the year. I still look for net positive returns by the end of this year, and we could be in the 8 to 12% range, maybe higher. We're looking at significant earnings projection growth for the S&P 500 for 2025 and further growth as we go into the 3 years after that. Again, this bodes well. Equity prices go up when you have earnings growth and GDP growth. The U.S. is looking to be poised to be the best place to be because of the positive changes and already policies that are being instrumental in the U.S. economy within the basic first 4 days of this new administration. There's going to be a lot more to come. As always, if you have questions about your portfolio or concerns, please call the office. If we need to schedule a phone or office review, give the office a call. Remember, our business grows from great clients like you. We appreciate your referrals, and we always need your referrals. Your friends and family members are probably not being treated the way you're being treated with your money management, the way that we provide at Resney Wealth Management. So keep us in mind when you talk to your friends and family. We love your referrals. It helps our business grow. And again, remember, volatility is normal. Expect it this year. And as always, we are here for our clients. Give us a call if you have any questions or concerns, and have a safe and profitable day.